Hi, this is the Philosophical Angle program, and I am your host, Chris Angle. I'm the author of 5 books on philosophy known as the Detmar-Haskell Dialogues, and they are The Nature of Truth, The Nature of Aesthetics, The Nature of Ethics, The Philosophical Equations of Economics, and The Nature of the Political Left and Right. If you'd like to contact us and make comment or inquire, feel free to give us an email at detmar.haskell@icloud.com. And Haskell is spelled with a double L. The purpose of the philosophical angle is to examine the nature and concepts of current media. And this week, we're going to examine the Laffer Curve. And we'll entitle this episode, Wherefore an Enhancement to the Laffer Curve. As almost everybody who has listened to a podcast, talk show, or interested in economics, the nature of Arthur Laffer is well known. Everybody knows him as the creator of the famous Laffer Curve. His graph indicates that when taxes are decreased, the revenue coming to the government increases, and this phenomena outlines itself as a bell curve. That is, if the government is taxing companies and or individuals at an extreme rate, such as 90%, the revenue stream coming to the government is not so much. However, should a government lighten up on their rate of taxation and lower it, this would induce corporations, investors, and people earning income to declare more of it, and to wit, the revenue coming into the government would increase. Throughout history, this scenario has run true, and thus, Arthur Laffer is famous. So here at the Philosophical Angle Show, I'd like to suggest that this Laffer curve is not really bell-shaped, but needs a slight adjustment. Let's find out why. Let's analyze the premise of the curve and see where it takes us. So the premise is that if government reduces the rate of taxation, it will receive ultimately more revenue, resulting from the decrease in the rate of taxation, and intuitively, it stands to reason. The thought is that if taxation is reduced, then the will for companies and people to make more transactions will be the result, giving more chances for revenue to the government. And why is this? Let's examine the economics. First, we need to understand what an economic transaction is. Let's start with the first principle of economics, which is that all life does that which is good for it. So, if we're going to do something good for us, we have to make a sacrifice to obtain the goodness which we seek in an economic transaction. We have to make a sacrifice in order to get a reward. And to explain, sacrifices are made up of knowledge and information. They're made up of time and effort. And they're made in an atmosphere of risk. And if it's a material product, we have to add in material, or land as the economist would say. When these equational variables combine together, we make our sacrifice in order to obtain some reward. The reward is also made up of information knowledge, time, effort, in the atmosphere of risk, and, when applicable, material. So, if any sacrifice within a transaction, there is a chance of a greater reward. That is, if the sacrifice is small and the reward is large, then the motivation is high. When the motivation is low, it will be because the sacrifice is great and the reward is small. Thus, with this reasoning regarding the transaction and the ratio between the sacrifice and the reward, there becomes the Laffer curve. Suddenly, if the government reduces the taxation rate, that will increase the reward of our sacrifices. That is, the motivation to do it, to make our sacrifice, to achieve a reward increases. And this is the underlined thought process for the Laffer curve. So, as we just mentioned, we may now say that economics has an equation that can describe a transaction. That equation is made up of the risk and the information and knowledge, the effort and the material and the time that it takes to make a sacrifice that we do in order to get a reward. So, for convenience sake, in order to fulfill dimensional analysis, we can multiply these out and get an actual product in a percentage of ergs, seconds, bytes, and grams to get an actual product that we can plug into a graph, enabling us to follow the progress of the transaction for any particular economic activity and economic entity, such as a company that produces either a product or a service. So one of these dimensions that we've used is the information knowledge complex. As individuals, we create knowledge. One of the things that results is that it allows us to make our lives more efficient. In other words, information knowledge is created in order to make our lives more efficient. As these efficiencies grow, the sacrifices become less and less, and the rewards become more and more. Should we add in the first dictum of life, which is that all life does that which is good for it? Then we have an ongoing incentive to create more knowledge, to create more efficiencies that create more rewards with less effort, less time, and less risk, and less material on the sacrifice side of the transaction. So now we apply this understanding to the Laffer curve. With our new understanding of the economic transaction that includes the ongoing production of knowledge to create these new efficiencies, we can see that the backside of the Laffer curve is not going to be bell-shaped, but it's going to trail off little by little and extend out and possibly may never get to zero because of the efficiencies that are constantly being added to the sacrifice of the equation, making it ever more and more efficient and making it more and more likely to increase the extent of the reward. And as we increase that reward, the government can decrease its percentage of the tax on that constantly increasing profit to maintain itself. Thus, the Laffer curve will never hit zero. So even if the government portion of the taxation on the economy runs down to just above zero, there are enough efficiencies that are coming into the economy through this sacrifice side of the equation into the transaction through the production of knowledge. The Laffer curve may never hit zero, and as such, the government's revenue may never hit zero. Even if the government were to bring its portion of taxation down to zero, still because of the philosophical economic law of differentiation, which is that companies seek to differentiate themselves to avoid competition, even the government may search for other areas of income. And because the economy would be doing well, because of the constant creation of knowledge, bringing more efficiencies into the transaction, other types of revenue will increase because it's all related to the efficiencies of economic transactions in an economy. So, in conclusion, if you have a society that is ever more producing knowledge and allowing that to come into play into the economic transactions of society, there will always be an increase of revenue coming to the government, even if the taxation rate goes down, justifying the idea and concept of the Laffer Curve. I hope you enjoyed this episode of The Philosophical Angle. We'll see you next time.